So if you're watching this video, you probably already know that to make money in the Forex market, you need money. However, in the Forex market, there's actually two solutions to this. So the first solution is the thing that I done, which is called compounding an account. So you take a small amount of money, in my case, it was £300, and you try to compound this 10x. And then there's the second solution, which is buying a funded account and getting funded and trading through a third party. However, a disclaimer I would like to put out there is neither of these methods require £0. You need to have at least £1,000 to £2,000 is what I would recommend. So if you're sitting here and you're thinking, I want to start trading, but I have a bank balance of 0, the first thing I would recommend is stop watching this YouTube video and go find a job, especially if you're still in education. That's exactly what I done, and that's how I got started. So to keep it nice and simple, let's say you start an account with £1,000. And every single time you take a trade, you risk 40% of the entire account on every single trade. And you have a risk to reward of 1 to 1.25. So the risk to reward is 1 to 1.25. And the reason the risk to reward is so low, like it's not 1 to 5, is because we're looking for a higher win rate strategy to get that compounding effect. So it's easier for our trades to hit those take profits and to not get stopped out, because if we get stopped out, we lose 40% of the account. So what we're trying to do is avoid any big losses. And because the risk to reward is 1 to 1.25, every time we actually have a win, because we're risking 40%, we actually times that by 1.25. And so every time we have a win, we actually gain back 50% of the account. So we, in this case, for the first win or loss, so we do win-loss, the account would go down to 600. So we would lose 400, but every time we win, we would make 500. So we go to 1,500, so plus 500. Now I can already hear people in the comments saying, yeah, but if you lose 3 times in a row, don't you blow the account? And yes, that is completely correct. If you lose 3 times in a row, if we lose again here, we go from 600 down to 360. And then if we lose one more time, we go to 260. All we're doing is times in by 0.6. So times by 0.6, because we're risking 40%. However, let's approach it from the completely other angle. Let's say we win all of our trades. How many trades in a row would we need to 10x the account? So, first trade we've already won, 1,500. Second trade would be 2,250. Third trade, 3,375. Fourth trade, 5,062. Fifth trade, 7,393. And then sixth trade, we'd actually get all the way up to £11,390. So after we deduct £1,000 for our initial deposit, we are left with £10,390 in profit. So we would only need 6 wins in a row to compound the account all the way up 10x. For people who are saying this is impossible, you will never be able to do that, I've done this multiple times. So here's one of my real accounts from Vantage Markets, MetaTrader 5. I took my starting balance of £300 all the way to 3.6k. And as you can see, when you compound, like you start 877, then 1.2, then 1.8, then 2.7. So I was nearly at the growth target, and then I lost 1 trade, because remember, we're risking 40% of your account per trade. So as you can see, it dropped all the way down to 1.6k. And then here we had probably a couple break-even trades, 1 win, 1 loss, 1 win, some break-even, and finally we hit the growth target of 3.4k. I'll show you what a lot of other people on the internet will not show you. This is the losing account, because of course, if I'm going to try 10x an account, I'm obviously going to have some losing accounts. In this case, 3 losing accounts. So every single time I deposited £300 into this account, I lost it every single time. So as we can see, balance 300 went to, after 3 trades, we blown the account, and then I deposited another 300. I think I got it up to 800 and then blown the account, and then another £300 deposit, and I just blew the account in 4 trades. So it is very, very easy to blow these accounts. However, I blew 3 accounts and I 10x'd on 2 accounts. So I was 6k up, and I've only spent around £900 to do it. So net total profit is around 5 grand. So if that does not appeal to you in any way, shape or form, then the second thing you could do is get a funded account. So this is probably the easiest way to build up some trading capital, so you can have larger amounts to play with, so you can risk some more and you can make some more. So FTMO is an example of a prop firm which hands out funded accounts to traders. Anyone can buy these accounts, but it goes up in price depending on how much capital you would like to acquire. For example, on the £100,000 account, I think it's around 540 GDP or 540 US dollars. However, there are some rules you have to follow when you're trading these accounts. For example, you have to trade for at least 4 days, so you can't make all of your wins in one day. You have to trade 4 days during the account, you have to make a minimum of £15,000 overall. So that's 10,000 in the first stage, 5,000 in the second stage. So around 15% because you're on a £100,000 account. And you can only have a maximum daily loss of £5,000. So you cannot risk more than £5,000 on one trade. And there is also a maximum loss of £10,000. So if the account at any point touches £90,000, including swaps and fees, then you will be terminated and locked out of the account. However, if you are successful trading this account, then they will give you a real £100,000 account, and anything you trade on there and any profits you gain will be given out in an 80-20% split, and this scales up to 90%, 10%. I would personally recommend to anyone who's trying to build up some capital while trading to start compounding before they do any kind of funded account. The reason for this is most likely you would want to do a funded account with big numbers, for example £50,000 or £100,000. And if you're only used to risking 1 to 2% on your small account, and say for example that's 10 to £100, let's say, when you get onto these big funded accounts, numbers like £1,000 are going to scare you. The mistake I see a lot of new traders doing is jumping straight into funded accounts. Even if they do manage to pass all the stages leading up to the funded account, then once they actually get the account, the big numbers, when it comes down to real money, will scare them. Your psychology will be shot. However, if you compound up a couple of accounts, you'll see that you have to risk £1,000 of your own capital, and you have to be completely okay with that to make those big goals. This builds up your trading psychology, so now you're used to seeing big numbers, big wins and big losses, and also it will help you prepare mentally as a trader.